don't let the stock price affect you. Like the more you put your emotion to make your decision, that's when you're gonna do something irrational. I see a lot of people like overcomplicating. Oh, I'm gonna invest in banks. I'm gonna invest in this.
Mm.
I just say to them, just stick to what you know. Don't worry about you have to diverse into banks, diverse into oil, diverse into this. Like, yeah, I'm also fairly comfortable investing in China anyways. Like, I think USA and China, I think they're gonna learn to get along in a way. They need each other. A lot of people ask me if I'm worried. I'm not really worried. I mean, even if something does bad happen, like I'm fine with it. Like I could probably recover at some point. I'm still
Okay.
young.
So yeah, we were talking about this offline. The Bank of England's thinking that there's going to be a recession
Yeah.
for all of
Mm.
2023. So how are you planning to invest in that kind of environment? Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you. Welcome back to the Takeoff Experience. So yeah, this is the first episode that we're recording in 2023, but you're actually going to probably hear this in, I think, at some point in February. Yeah, we got Wes back in the building. How are you doing today?
I'm good. Thanks for having me back on. It's a pleasure to be on your show.
No, it's all good. It's all good. How was your Christmas and New Year?
It's been good, thanks. Just relaxed, chill, really. But it was a good time off, really. How about you?
Yeah, mine was all right. I was ill for most of it, to be
Yeah,
honest. Yeah, I was ill. I think I was ill right up until a couple of days ago. So yeah,
yeah,
I think I had the flu for like 2 weeks. So I was wiped out. But you
yeah,
have to just do what you got to do. But yeah, no, it was relaxing. It was nice to have the time off. It was
yeah.
nice to reflect on 2022 and what we achieved with the podcast and
Mm-hmm.
Savvy Wallet. But yeah, it's good to be back. I'm
Yeah,
looking forward to 2023. I've
yeah,
got some big goals that I want to achieve. We'll see if we can
yeah.
achieve them. But yeah.
Mm.
So for those that haven't listened to, we've done a few episodes together.
Yeah.
Who is Wes?
Wes. So I'm Wes. I'm 27 years old. I was born in Jamaica, grew up here. I'm an investor, value investor, and yeah, I've been investing for around 3 years now, maybe.
Okay.
Yeah. So
Nice.
yeah,
And you also got a page, right, as well? Can you
yeah,
talk to us about that a little bit?
yeah. I got an Instagram page. It's got around 3.7K followers. Instagram page is at Investing with Wes. I started that around last year, July maybe, and yeah, it's been great for me. I've met a lot of people. Networking. It's been fun for me. Just creating content. Helping people learn stuff like that.
Did you know where it's at? Did you think it would go to where it's gone to when you kind of started it?
Not gonna lie, no.
Yeah.
Yeah, cause I didn't expect people to be engaging what I post.
Mm.
Cause when I started, I was doing something completely different. On Instagram, you basically see a lot of these hype stocks, and that's was popular then. So it's kind of hard at the beginning, but I just stuck to it, and somehow it just managed to work where I've grown to this amount of following.
Mm.
So yeah, it's been yeah.
Okay. I love that.
Yeah, I
I love
think
that.
people like my content because it's just different in a way, maybe.
Yeah.
And I think you have to be different.
Yeah, I think so. I think being different is important
Mm,
and have confidence in your approach. I was listening to something the other day.
mm,
I think it was Poet. Poet said something where he was like, I think they were asking him a question around like, you know, if you've got an idea or something, I'm paraphrasing here.
yeah,
If you've got an idea or something, um, like basically, if you have confidence in the idea, you'll
yeah,
continue with it, kind of
mm,
thing.
mm,
But if you kind of like veer off and move to something else, it kind of shows a lack of confidence in yourself and belief in yourself, which I think is kind of true
yeah,
in a way, right? Like I don't think like you can get anywhere in life without trying to,
mm,
you know,
yeah,
have confidence and stick to your plan.
yeah,
Yeah, it might not work out, but at least you're confident in that plan. If you get what
exactly,
I'm
yeah,
saying, right? Instead of just like flip flopping
yeah,
on
exactly.
on everything. Do you know what I'm
Yeah,
saying? So
yeah,
yeah, man. Talking about flip flopping, the stock market is on a mad thing. Well, it was a mad thing last year.
Yeah.
So 2002.
Mm.
So I've got down here that the S&P 500 was down 18%. Apparently, that's the worst annual return since the Great Depression.
Yeah,
They're saying.
that's what I've heard. I think so the 2000 so last year in the stock market, I think it's important to reflect on everything that's going on. So we've seen a lot of stocks drop in value 60, 70, 80, 90%. Even if we're not invested in those companies, still an important lessons to learn because it's something that happens a lot of time where people get overly excited, causing prices to go up, and then eventually reality sets in, and then stocks just come back down to earth. But I think those who are invested in all these companies that are down significantly, just take it on a chin, just learn from it, know what went wrong, and if you've learned from it, there's still you can still do well in the market over the long run. So yeah, it's been tough for a lot of people because I've been speaking to people in
Mm,
the private message. I scroll through my feed and people post their portfolio. It's sad to see really
mm,
them being down so much because your goal is to compound over life,
yeah.
and if you're compounding and you're down 60% one year, it's going to be very very hard to
Mm,
recover that. So
yeah.
it's sad really.
Yeah, it's a tough one. Yeah, I think 2022 is such a unique year because obviously we're still going through or recovering from a pandemic. Then you had inflation going up, and then you had interest rates going up as well, and then you had people talking about a recession. I mean, in the US, it's like technically it's a recession. In the
Mm,
UK here, we're not like sure yet, but they're
mm,
saying that yeah, for 2023, they're thinking it's going to be. So it's a bit of a tough one, but yeah, like you said, I think it's like lessons learned, and I think these things are like good history lessons for you to look
yeah.
back and be like, "Ah, okay, cool, yeah, okay, clearly the
Mm,
stock market was overvalued. Everybody was getting way too excited
mhm.
on the recovery and the optimism, and yeah, it's like you said, it's like people learn from that. Um, so how did your portfolio perform? I know how it did because obviously I follow you on Instagram, but for like
Yeah.
the listeners and watchers, how.
So last year, so from January 2022 till December 2022, I think my portfolio performed at around -4% year to date, and I think the market returned like negative 18, 19%.
Mhm,
So there was a clear outperformance right there.
yeah,
So I'm pleased with that really, because my goal is to try and survive a bear market really. If I can, yeah. So I want to do better than the market during the bad times, because I feel doing better than the market during the bad times is more is it shows someone that they're very skillful at what they're doing.
mhm,
Like, because when the market's going up, you don't really need to be skillful at it. Like,
mhm,
you can just throw a dartboard and everything will go
yeah,
up. So yeah, the bear market's interesting. I just want to survive it, try not to lose as much, not to lose money, and just take things slowly. This year, I'm off to a great start so far. I'm up around 9%,
okay, wow,
even
that's
though
good.
even though it's like 4 or 5 days.
4 5 days
Yeah,
in, yeah, don't
yeah.
get gas, man.
It's I'm not gonna be happy. Like, I'm just gonna see how I can do. See what if we're 6 months in, we're still doing well.
Mm,
That's gonna be good as well.
yeah,
So yeah, I'm just trying not to lose much money in
yeah.
this bear market.
How did you feel though when like when your investments were going down at the time? Like what was like the thoughts going through your head?
So my investments going down. Mostly the ones that were going down was probably, I would say, Meta and the Chinese stocks were going down around the same time.
Mm.
To be honest, um, I have a group chat. I just phoned one of my friend and we're just literally laughing about it. Really,
Okay.
we just bought more because that's the sensible thing to do. Really, yeah, you just don't let the stock price affect you. Like,
Mm,
the more you put your emotion to make your decision, that's when you're gonna do something irrational. So if a stock's going down,
mm,
you just take yourself away from the market. Just reflect. Okay, what is my
yeah.
thesis? If my thesis is still the same, you buy more. But for some people, it's very hard to do that
Mm.
because no one really likes to, you know, put money into a company and then it
Yeah.
just goes down even more. But
Yeah.
you just have to understand your thesis, and over time, the market will get it correct. So that was what I basically, done. So yeah, I can cope with declining stock price because I also know the true value of the
Mm.
company, and I think that's important as well.
Okay. Cool. Cool. Cool.
Mm.
What mistakes do you think you made in 2022?
Okay, so in
And
my
you said some of these in your newsletter.
yeah, so
So
in my
yeah.
newsletter, I felt that I overpaid for PayPal and Meta.
Okay. That's
Yeah,
interesting.
so even though I overpaid, it's not the end of the world because my goal is to earn 15%. Even though I overpaid, I could probably earn around 7%, which is still good at the end
Yeah.
of the day. But yeah, luckily PayPal it went up, so I made like 30% on it and I sold it.
Okay.
With Meta, I'm happy with
Oh, you
the
sold PayPal?
yeah, yeah.
Why?
So
I'm confused. I'm like, wow, you sold PayPal? Mad.
To be honest, with PayPal, right, it's a difficult one. Like it's in a very, very competitive industry,
Mhm.
and I feel the fundamentals are deteriorating in a
Okay.
way. So, and also my strategy has really shifted since you've last spoken to me.
Okay.
So I'm more favor really smaller companies now.
Okay. It
Yeah,
goes okay.
yeah.
The small
So
caps type,
yeah,
mid
small
cap
caps,
stops.
yeah,
Yeah.
large, yeah, those kind of things. So
Okay.
yeah, that's what I'm more favorite towards. And so yeah, so back to the mistakes. I overpaid for PayPal and Meta. I'm fine with holding Meta because my average has gone down now.
Mm.
It's one that I want to hold on for a decent, long run.
Mm.
Um so yeah, those are the mistakes. I also made errors of omission, which is
Mm.
basically you know everything about a company,
Mm.
but you just don't buy it in the end for some
Okay.
reason. Like there's just something you feel that you're missing, and I
Mm.
had that with a few companies, where I knew everything about the company, but I didn't buy it, and then like a month later they're up 40-50%.
Mm.
So it does hurt,
Yeah.
but you just gotta
But you can't invest in everything, right?
no, you just
You know
gotta
what I'm
yeah,
saying, right?
exactly.
And like, it's funny you say that because I feel like no one can tell the future. So,
Mm,
and that's what's so exciting and
mm,
scary about the stock market. You
yeah,
don't know what's gonna happen. So
mm,
yeah, as much as you're saying, yeah, it went up 40%, but what if it went down 40%? You'd have been like, oh yeah, I'm glad
yeah.
I dodged that bullet,
Mm.
right?
But the
So
thing is, these companies were statistically very, very cheap.
okay.
So one company, was growing around 15% compound annual growth rate
Really?
for the last 5-10 years.
Wow.
It's a flower company,
Was
and
it a flower company?
yeah,
A flower company.
yeah, yeah, yeah,
Okay.
yeah. So they were really cheap. They were selling below their book value. So
Yeah.
that's literally rock bottom
Yeah.
valuation. So if they, go bankrupt, I'll
Yeah.
still win in the end
Yeah.
from the payouts. So it was a very cheap company, but for some reason I didn't buy it.
Why? Because
I don't
it's a
know.
flower company.
I don't know. Some reason I just did not buy it. Like I was just trying to find what's wrong here. Like why are investors pricing this so low?
Yeah.
So I'm like thinking, I don't know. And yeah, it's at around £9 or £10 now.
Okay.
When I was looking at it, it was at around six
Oh
pound.
wow. So yeah, like a
Yeah,
good 50
yeah.
percent.
So yeah,
Wow. That's mad. That's mad.
yeah.
Yeah, I think you said there like some of the challenges of investing that sometimes no
Mm,
matter you do all the research in the
mm,
world, the valuation is good and you sometimes you just doubt yourself that you're gonna
yeah,
get it right or wrong. And this is why investing is so difficult
yeah.
because hitting that buy button is
Mm,
not easy. Hitting
no,
that sell button is not easy
yeah.
either, you know. Um what other challenges do you think that you had like with investing in like 2022?
Um, I felt. I mean, apart from those two minor mistakes, I wouldn't call it major mistakes.
Mm.
Um, I didn't face too many challenges. I was pretty much fine with like the psychology of seeing things going down.
Yeah.
Really, my portfolio didn't really take a batter in where I lose sleepless nights or anything.
Mm.
Like it was pretty much steady. I think the maximum drawdown was probably around 10% year to date last
Okay.
year. So it was. I didn't really face many challenges from what I can remember.
Yeah. Okay.
Yeah.
Okay. Cool. Cool. Cool.
Mm.
What are you gonna do differently in 2023?
Nothing really.
You're gonna do the
No,
same thing.
same
Okay,
thing.
we're gonna talk. We're gonna hold that thought. We're
Yeah.
gonna talk about your plans in just a
All
second.
right.
But we're gonna talk about your favorite stock right
Mhm.
now. Your favorite company, Tesla, right now.
Yeah. So I mean, I've done multiple Tesla posts,
Yeah,
and since then they're probably down significantly.
72% from all time high
Yeah.
down.
So
Yeah,
I mean, you, a lot of people are invested in this company,
yeah,
and
a
I see
lot
a
of
lot of
people.
people bailing from it. So I don't know what the reason is. Like it was clearly overvalued,
Mm,
so I just stay away from those kind of things because yeah, you don't want to lose money on an
mm,
overvalued company. Like
yeah,
it's very very hard for something that's really overvalued to
mm,
actually recover back.
yeah,
And we've seen that in 2000, the tech bubble, where a lot of the companies, like even till today, none of them have touched their all-time highs.
mm,
So yeah, yeah, when something's clearly overvalued, just stay away and just
yeah.
yeah.
What do you think's going on with it? Like, why is it cratering like that? Like, like,
um,
even though yeah, it is overvalued,
mm,
but the decline was so rapid. It was
yeah.
crazy.
I mean, there's always a reason to justify something going down or
Yeah.
up. A lot of people are saying the reason why Tesla is crashing is because of Elon,
Mm,
with micro factors, and all that sort of stuff. So it's really hard to tell. Maybe it's a little bit of everything.
yeah.
So yeah, but at the end of the day, you can't really blame all those things.
Mm,
It was going to happen one way or another,
yeah.
whether they probably missed earnings really badly
Mm,
or it's all these little things. So
yeah.
yeah, it's just falling so fast, so
Yeah.
quickly. Like,
I mean, Twitter, I feel like I think a lot of people think that Twitter, Elon buying Twitter has
mm,
something to do with it because I guess he's
mm,
now added another company to where he's CEO. He was already CEO for
mm,
too many companies, Tesla,
yeah,
SpaceX. There was a robot company,
yeah.
and then there was one more, some kind of
Think the
mind one or
I
whatever.
think the Boring Company or something.
Yeah,
Yeah,
yeah. So he was already CEO for like four companies,
yeah,
and he's taken on a fifth, and then the fifth is also
yeah,
a massive. We're
yeah,
talking about multi-billion-dollar
yeah,
company. So, and he tweets a lot. He
yeah.
tweets a lot.
A
I
lot.
feel like he's tweeting a lot more now
Yeah,
that he's the
exactly.
CEO
Yeah,
than when he wasn't.
yeah.
And yeah, I think it's yeah. What do you think about that? What do you think about the recent?
I
Yeah, I
mean,
won't. Let me not call them antics, but
yeah.
like the shift with him, with what's going on.
I think he's really pushing a lot of people's buttons. Like he's trying to be edgy in a way. So yeah, I prefer if my CEO didn't tweet. Really, I
Yeah,
prefer if they just run the business and yeah, try and get maximum value from it. But yeah, not much to say really regarding Elon's antics, but I just ignore it really. Like
yeah,
what he's tweeting. Like I think it's just ridiculous.
yeah. I would imagine somebody who's lost 200 billion in net worth. I would imagine he would calm down a little bit and chill. I mean, to
Mm,
be honest, he's still worth a lot from 340 billion to 137 billion. That's still a lot. I
mm,
think he's still like the second richest or third richest
mm,
anyway. So he's still
mm,
wealthy. Like he's
yeah.
wealthy beyond imagine imagination. You know what I mean? So it's not like it's so hard because it's like how can you even criticize somebody like that, right? You're like,
Yeah.
oh yeah, okay, you lost 200 billion, but the people criticizing him don't even have a fraction
Yeah.
have a fraction of
Because
that.
the
So
thing is, I mean, he sold a lot at the top, so I
yeah,
don't think he's phased if he's lost so much within this short time. Like
yeah,
he was selling at the top, so
yeah,
yeah.
yeah. What was your price target again for Tesla? Do you remember?
I think around $50.
50. If it ever got there, $50. So that's about like we're thinking, that's a 50% drop
A
almost.
50-60% drop from
Yeah.
probably
Would you ever, if it ever got there?
I don't know, to be honest. It's so
Yeah.
yeah, I'm not sure to
You knew
usually
AI was coming, self-driving robots at $50.
to
Would you
be
be like,
honest, car companies are usually out my circle of understanding. I never usually
yeah,
like to invest in them because
yeah,
it's really competitive,
yeah,
like low margin. They all always go bankrupt every now and then.
Hmm.
So I would have to. I don't know. Really, if I would invest in it. What about you? Would you invest in it? I know you used to own it, but
I used to own Tesla and I sold it. I sold it because of Elon. That
Mhm.
guys don't crucify me. And it was, yeah, it was getting expensive. I was like, yeah, this is. I think I made like 80 to 100%. So I was like, yeah, I think I can get out of it.
Yeah,
And I made that 80 to 100% even being
yeah,
late. It was
yeah,
later. So I
yeah.
was like, yeah, okay, I think I can get out. Would I invest? I don't know right now. I
Mm,
think I want to monitor the situation. It's interesting to follow. I think
yeah.
they're very interesting case study to follow.
Mm,
But right now, with Elon being the CEO of Twitter, no, because I
mhm.
feel like his focus is just not there with
Yeah.
where it needs to be. And like you said, competition is catching up. You got all these other startups
Mhm.
coming into the space as well. So I feel like because his focus is not, I feel like he's almost feel like Tesla's at a stage and he's like,
Mm,
oh yeah, I can just kind of
yeah.
be a bit hands off. I feel like that's what he feels like we've made it. Because
Yeah.
they're big. They're like a big brand. Like they're
Yeah.
very well known. It's not like they need to do much marketing anymore.
Mm,
They're known company now, I think.
yeah.
So I feel like he's just a bit like, okay, let
Mm.
me just focus on my new baby Twitter
Yeah.
kind of thing. So
Mhm.
yeah, yeah. I think for now, no, I wouldn't go back into Tesla. I think I'd
Yeah.
stay out of that one,
Yeah.
unfortunately.
There's probably better opportunities out there, to be honest.
Yeah, yeah,
Yeah.
definitely. Talk about better opportunities. Chinese stocks, they're having a bit of a rebound. I know it's a little bit early, but they were having their rebound anyway
Yeah.
towards the end of last
Yeah,
year.
that's correct.
So what remind us what companies are you invested in China at the moment?
So China, I currently have holdings in Alibaba, JD.com, and Tencent Holdings. Those
Yeah,
are the three main ones I currently have in my portfolio.
yeah,
So they're pretty big allocation. I think I have maybe around, I think maybe 48% China.
48% China.
Yeah.
Are you
So
not worried about that?
no,
Seriously, why? Why are you not
I
worried
don't
about
know.
that?
Like a lot of people ask me if I'm worried. I'm not really worried. I mean, even if something does bad happen, like I'm fine with it. Like I could probably recover at some point. I'm still
Okay.
young, but I think USA and China, I think they're gonna learn to get along in a way. They need each other. I think China, they want to be the number one economy, and if they want to be the number one economy, they're gonna need these companies, and they're gonna have to let the companies do their own thing.
Okay.
So I think China will thrive in the next 5 to 10 years.
Mhm.
Um, I, and also recently they're they're like not cracking down on the tech companies. They're just letting them do their thing. They've given a few gaming license like
Mhm.
Tencent and NetEase and all those ones.
Mm.
Yeah, so I think this year
What was that? What was that license thing?
a gaming license.
So they're giving them
So the
it
yeah,
now.
just yes,
What's that mean? Like,
a gaming because you need a gaming license.
okay,
Yeah, to publish games because
really?
yeah, in China they're really strict on gaming. So
Yeah.
yeah, so
I
yeah,
think something about like I remember
mm,
I read it somewhere. They is it like children only can play 3 hours a day
yeah,
or
something
something
like
like that? That's
that was
crazy.
yeah, it is. I mean, yeah, it's insane. I think this year the companies will be allowed to grow.
Yeah.
There won't be. I'm expecting no more crackdowns. They
Yeah.
seem to just let it go.
Yeah.
They've also been cooperative with the audits with the US.
Okay.
So that should be, the final decision should be coming out, you know, probably in the next, probably three months. So yes, apparently it's good news.
Mm.
The audits were done very very quickly.
Yeah.
So yes, it's going to be interesting really because I feel there's a lot of catalysts and the share price should go up a lot
Yeah.
if these catalysts plays out.
Yeah. You were saying something about like in terms of, I wanted to touch on that a little bit
Mhm.
where you were saying Yeah, if it doesn't work out, like
Mm,
you're young enough to
mm.
recover. Can you talk a little bit more about that, like what you meant there?
So say say like they get delisted or something.
Mm,
I'm fine with losing whatever I've put.
mm,
Like I still got a long investing runway,
yeah,
so I could recoup those losses that I've
yeah,
made over a long period of time.
yeah.
But I don't think it's going to come to that because even if they do get delisted,
Mm,
I could get my shares converted to the Hong Kong ones.
okay.
So I'll basically own them over the counter. So yeah, that's all. I'm not too worried about the whole delisting. I think it's far behind us right now.
Mm.
Um, so yeah, that's it really.
Okay, okay.
Yeah.
It's interesting. The reason why I wanted to touch on that is because like um you're investing what you're
Mhm.
would you say like you're happy nobody's happy to lose money, of
Yeah.
course,
Yeah.
but you're comfortable if
Yeah.
it doesn't work out.
Yeah.
I'm still young, I'm still able,
Mm.
I earn a salary, I'm
Yeah.
gonna be able to
Yeah.
invest in the future. Even if I lose this, if
Yeah.
this doesn't work out, I can
Mm.
learn from it and then
Mm.
invest in the future. That's how you're looking
Yeah.
at it. Okay.
Yeah.
That's interesting. That's
Yeah.
interesting. That's a good way to look at it, I think.
Yeah.
That's a very good way.
And yeah, I'm also fairly comfortable investing in China anyways. Like, I know like I've looked at the situation enough.
Mm,
So yeah, I'm fine with it really.
yeah.
Yeah.
How do you think they're gonna perform in 2023? Because they still got lockdowns, right? What's
So
happening out there?
they're easing up. They should be
Yeah.
easing up around this month, next
Yeah.
month. They said they're gonna scrap the zero COVID.
Okay.
So
What's the
yeah.
zero COVID? I've been hearing about
So
that.
zero COVID is like proper strict lockdowns. Like
Mm,
um basically you're not allowed to go out and all that stuff.
mm.
Yeah, it's really
I can't believe they're still doing that.
yeah. I
That
know.
sounds wild, isn't it?
Yeah,
Because I
swear.
swear they must be the only country that's
Yeah,
doing that.
yeah, but they know. I think they noticed that the economy is shrinking because
Okay.
of the zero COVID rules. So
Mm,
they're just opening things up now.
yeah.
Finally, after like 3 or 4 years.
Yeah.
So yeah, I'm expecting the Chinese companies to show recovery in probably the second quarter of this year.
Okay.
So yeah, we just have to wait and see really.
Yeah.
But
Are you gonna be still investing throughout?
yeah, yeah,
Yeah. In
yeah,
in the same ones that you mentioned.
yeah, yeah.
Okay, you're not gonna stop. You're
No,
not like
to be honest, so because the stock price have gone up,
yeah.
I've kind of like stopped adding because
Okay.
I don't want to, because I want it to go down more.
Okay.
So what this allows me is to just focus on other companies in my
Mm,
portfolio. So it's kind of a blessing in disguise.
mm,
I don't really want to, buy above what I originally bought
okay.
it. So
Okay.
yeah.
Okay, so you're not really looking at Chinese stocks anymore. You're like, okay, a little bit
Um, a
out the
lot of
way.
them were shut up. I
Yeah.
did like Weibo as well.
Yeah.
So that's the Chinese Twitter.
Yeah.
Maybe if there's nothing else to buy and I've
Yeah.
spare cash lying around, I would allocate a small position to them because I do like them
Yeah.
Weibo.
Yeah.
Mm,
Okay. Cool. 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 Cool.
mm,
So yeah, we were talking about this offline. The Bank of England's thinking that there's going to be a recession
yeah.
for all of
Mm.
2023. So how are you planning to invest in that kind of environment?
So for me, I don't really change anything regarding my investing style.
Mm.
I'm still gonna invest the same way I always invested, and
Yeah.
that's trying to find undervalued companies that's trading at a margin of safety price. I don't know how to edge, so a lot of people are edging with oil and
Mm.
all these other commodities.
Yeah.
To be honest, they're out of my circle of understanding, so
Yeah.
I wouldn't be able to do that. So I'm just sticking to my main principles, really.
Yeah.
And as I was touching on earlier, for me, my interest lies in smaller companies,
Yeah.
and I'll tell you why. So we're retail investors.
Mm.
You're not a billionaire, are you? So,
No, not
so,
yet.
yeah,
Not
so
yet.
we're not billionaires that we need
Yeah.
to, find something intelligent to,
Yeah.
put our money to work. So
Yeah.
we have an advantage where we can invest in these smaller companies where it's enough to move the needle.
Mm-hmm.
So yeah, that's what I've gathered. Like people like Buffett, he can't invest in like a $500 million companies.
Yeah.
He'll end up buying the whole company.
Yeah.
So
That's true.
us retail investors need to take advantage of this, where we're going to be competing against other retail investors,
Mm-hmm.
maybe small fund managers who are just starting the game. And with that, that leads to outsized returns when we're looking at these small illiquid companies.
Yeah.
So that's just mainly my way I'm gonna invest in, as long as
Okay.
I have the funds to do that.
Yeah.
But obviously, if I somehow become a billionaire,
Mm.
then I'd have to switch it up to the Warren Buffett style.
Okay.
So yeah, I'm basically it's do it in stages. So stage one,
Mm.
you're looking at all these small companies, maybe special situation.
Mm.
Once you build enough cash, then
Mm.
you move on to something like
What's a special situation, by the way? Sorry to
so.
interrupt you,
No, it's
and
fine.
then we'll go
So
back to
special
what you're saying.
situation is basically value investing with a catalyst. That's how
Yeah.
I like to define it.
Yeah.
There are also different types of special situation.
Mm.
So you have spin-offs.
Yeah.
That's my favorite.
Yeah.
So when a parent company spins off a subsidiary,
Yeah.
they will do that maybe because they feel the subsidiary can provide value on its own.
Mhm.
It can reach its full potential.
Yeah.
So maybe I don't know if you remember AT&T spinning off Warner Bros.
Yeah.
So
Yeah.
that's a
Yeah.
spin-off. Spin-offs are really good for retail investors
Yeah.
who are, who are small sums, because spin-offs tend to outperform the market
Mhm.
by around 15 to 20%
Wow.
over the long run. So yeah, I'm looking at, spin-offs. The another thing with special situation is merger arbitrage.
Mhm.
So when two companies merging together, you usually
Yeah.
get that spread, like
Yeah.
Activision, Blizzard, and
Yeah.
Microsoft.
Yeah. 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 Yeah.
So that's another one. That's
They're
good to
like,
look
I
at.
think, how much do they say they want to buy it for?
Yeah,
85 a
yeah, something
share?
like that.
Something like 85 a share. Let's, for example, say
Yeah,
Microsoft want to buy it for $85
yeah,
a share, but right now, Activision Blizzard is like
yeah,
$70 a share. You're gonna make
yeah. That
$15
yeah.
because it'll be sold for that
Yeah,
for 85 a
it's
share.
like
Yeah, something
it's
like
like a
that.
quick,
Yeah.
quick quick thing. And there's also liquidation play.
Yeah.
So a company, they're trading below their net asset value.
Okay.
Because I haven't got the power to force a liquidation, maybe shareholders as a
Yeah.
collective can say, hey, we're trading below liquidation. The best way to return value, since the
Mm.
company isn't going to do anything, maybe the company is a dying company,
Yeah.
the company would sell all of its assets, pay down its debt, and then
Okay.
return all that cash to shareholder in
Really?
dividend.
That's interesting.
So that's another one. There's also bankruptcy.
Okay.
I think that's not something I would get into, because you need probably a law, be good in law
Yeah.
to know the rules and stuff
Yeah.
regarding bankruptcy. Um, yeah, there's a few other ones, but my favorites are spin-offs. Really, that's the
Okay.
one that I'm more geared towards, and obviously looking at smaller companies.
Okay.
Yeah,
Cool, cool, cool. Sorry, I interrupted you before what you were
yeah,
saying. You were talking about special situations
yeah.
and small. Yeah, if you wanted to continue talking about that, small
So
caps. Yeah,
yeah, so smaller companies. Yeah, for the average retail investor, I feel that you should be invested in small companies,
yeah,
because you're competing against other retail investors and
yeah,
small fund managers. And if you're looking at these small companies, they're not well known,
yeah,
they're not in the public eye, which means you're going to get outsized returns.
yeah.
So in order to outperform the market, you have to be different and do something different from the
Mm.
average. Like, um, I'll give you an example. Google. Who doesn't know Google?
Yeah, true.
Like you can
Everybody
find
knows.
out every information about Google,
Yeah.
but if you look at a small company that's, I don't know, 500 million market cap, like not a lot of people know it. There might be a mispricing. So you can have an edge on that $500 million company, whether
Mm.
that's maybe an analytical edge. You might have a behavioral edge where you're good with good with volatility, because they tend to be volatile, these
Mm-hmm.
companies. Maybe it's a company in your circle of understanding. So yeah, looking at these small companies will give you really good returns over the
Yeah.
long run. But if you're looking at something like Google, it's very hard. It's like, what, $1 trillion company.
Yeah.
It's very hard for that to go to 2 trillion, then
Mm.
4 trillion, six.
Mm.
So yeah, that's just mainly my goal. And I'm looking at quality small companies, the ones that make cash flow,
Mm.
profits, and they have good margin and low
Yeah.
debt. I think
Okay.
those are the key things to look at.
Yeah. Is there any in particular that any companies particular right now that you're looking at that you're
So
interested
my
in?
portfolio, surprisingly, when I was starting to think about this way, I had mostly small companies anyways,
Okay.
apart from, Baba and all
Yeah.
the other Chinese companies and Meta, and then I had PayPal at the time.
Yeah.
So most of my so in terms of small companies that I own right now, I own Sprouts Farmers Market.
Hmm. What's
I
that? What do they do?
so they're like a supermarket in America. They sell like organic products,
Okay.
organic nutritional stuff as
Okay.
well. So yeah, it's a really small company. It's popular in America. Like
Okay.
yeah, if you go America,
Yeah.
you ask some Dino Sprouts, they'll probably tell you it's really good, but it's an expensive place to shop at. But people
Okay.
just love to go there though.
Yeah.
Um, who else have I got? IG Market.
Mm.
I'm in that one as well. I'm also invested in Academy Sports and Outdoors.
Mm.
That's been really good to me. Hibbert Sports as well.
Hmm.
That's been good. I recently, spoiler alert, I bought Dr. Martens.
Okay.
Yeah,
Dr. Martens.
yeah,
That's your brand.
yeah,
Yeah, that's
yeah,
bad.
yeah, yeah. It's a really, really strong brand.
It is a strong brand, to be honest. Yeah, yeah.
Yeah,
People do like Dr. Martens.
yeah,
Yeah. Strong business too, I'm
yeah. Really
presuming.
strong business.
Yeah.
Been around for a very long time.
Yeah. How long? How long has it been?
Very, very long. I
Yeah.
think it's over 60 years old, the company.
Wow.
Really,
Seriously.
yeah,
That's
yeah.
crazy.
And the thing is, the shoes, the main shoes that represent Dr. Martin,
Mm.
it's still the top seller today.
Okay.
So it's a really, really strong brand. I made sure I allocated a decent amount of that.
Mm.
Um, I'm looking at a few smaller ones. So I'm looking at I bought Airtel as well. That's another
Okay.
one I have.
Yeah, I remember you telling me about that. That's a
Yeah,
African telecom
yeah. Slash
company
payment. They got payment as
slash
well.
payments, but they actually
Mm.
they're listed here in the
Yeah,
UK, but
they
they actually do all their business in Africa, right?
so
Yeah.
yeah, they operate in Africa.
Yeah.
They're listed on London Stock Exchange, but
Mm.
they're owned by an Indian company.
Oh, really?
Yeah,
Oh, that's so
so
complicated.
yeah, it's very
Uh,
complicated
yeah.
structure. Wix as well. I don't know if
Okay.
not
Yeah, I
Wix,
know
not
Wix.
the website builder, but the DIY store.
Yeah, yeah, I know them.
Yeah,
Yeah,
yeah.
yeah,
So
yeah.
I'm invested in that one. That's a special situation. They got spun off
Okay, by
by
who?
Travis Perkins.
Okay, Travis Perkins. What they do again?
They're like a home build, home
Home
like
builders.
DIY stuff.
Okay.
So they got spun off. The stock probably crashed like 80% since it spun off.
Really?
So I practically paid nothing for the company. I'm collecting a 10% dividend every quarter, just waiting for the stock price to
Wow.
go
How did
up.
you find that one? That sounds
Wait,
insane.
a screener.
Okay.
Most of the companies I find are from screeners,
Okay.
really.
What's the screener that
So
you use?
screener, so I use multiple ones. I use Finviz screener,
Yeah.
Yahoo Finance screener,
Yeah.
and Simply Wall Street screener. I
Yeah.
use them whenever I screen. I use all threes,
Yeah.
because you can find different companies on
Yeah.
each ones. Because on Finviz, you tend to get like banks, oils, and
Yeah.
commodities, and your Yahoo Finance, you get a broad range.
Yeah.
I do like Simple Wall Street though.
Mm.
Like it lists a lot of undervalued ones that you can find.
Yeah.
So yeah, I use those three to
Yeah.
uh, um capture different metrics when I'm screening.
Yeah.
So
And
yeah.
what do you what kind of things do you put in criteria? What criteria do you put in for your screeners?
So criteria,
Yeah.
so I put large cap and below. No,
Hmm.
I do medium cap and below.
Okay.
So I'm not sure the market cap, the threshold for medium cap,
Yeah, I can't
but
remember now.
yeah,
Like how many billions or whatever
yeah.
it is.
So
Yeah.
and I put profit margin over 10%,
Okay.
return on invested capital over 10%.
Okay. What's
Uh,
return on invested
So
capital? Sorry,
return on
just
invested
yeah.
capital is
Yeah.
basically how much cash the company can generate
Yeah.
by investing in itself.
Hmm.
So I like a 10% threshold. Stock market returns around 7 to 10%.
Yeah.
I just like to go 10%.
Yeah.
And what else do I put? Growth rate over 5%,
Okay.
and yeah, that's about it. It should give me a decent sized
Yeah.
chunk to just
Yeah.
look through, and also select the sectors I'm comfortable invested in, because
Okay.
I'm not I'm not comfortable invested in a lot of sectors. So
Okay.
yeah, I like to select consumer discrepancy,
Yeah.
consumer staples,
Yeah.
um sometimes e-commerce,
Yeah.
technology companies, those kind of stuff.
Yeah.
So yeah,
Yeah.
that's some basic metrics that I select.
Yeah. You work in the consumer staples
Yeah,
industry,
yeah,
right?
yeah,
From that point of view, how is a recession impacting that? Because you're kind of like an insider
yeah,
in it almost, right?
yeah.
So what, yeah, like could you tell us what's like kind of going on from that perspective?
So from what I can see, a lot of the price of the goods have gone up a lot.
Yeah.
From what I gathered, in terms of the shopping trend, people are still shopping,
Mm,
even though the food have gone expensive. So yeah, I noticed, because foods are getting expensive, there's a lot more like theft and stuff like that.
is
I
it?
think
Okay.
Target was complaining about that as well, like
Mm,
because of this, the food's gone expensive. A lot of people are stealing more.
mm,
So yeah, but I do notice the trend that people are still buying
mm.
a decent amount of shopping, even though it's
Okay.
gone up a bit.
Yeah.
Yeah.
Okay. Wow. That's
Mhm.
crazy. Um, what companies do you think will do well in this environment, in this weird environment
In
that we're
this
going to be in
environment,
2023? Yeah.
so I'd say it's the companies that produce a lot of cash flow
Okay.
and actually have real earnings.
Okay.
The ones that don't have earnings will probably still get priced down.
Okay.
Yeah, that's what I think. Cash flow is what
Yeah.
always matters. In the bull market, it might not matter when everyone's buying the latest non-profitable tech companies,
Yeah.
but in the long run, when the bear market hits, that's when cash flow matters
Yeah.
because cash flow's king, really.
Yeah. You're generating money for the actual
Yeah,
money for the company, not just empty revenue in it,
yeah,
like no profit from
mm,
it, right? Because your business will die
yeah,
eventually if you never make it profitable, right?
exactly.
Can't work like that.
Yeah, I see a lot of people like overcomplicating. Oh, I'm going to invest in banks. I'm going to invest in this.
Mm,
I just say to them, just stick to what you know. Don't worry about you have to diverse into banks, diverse into oil, diverse into this. Like, because whenever I like to ask questions, so whenever someone asks me about a specific bank, I just ask them, so what do you like about this bank? Do you understand this industry? And most of the time they said no. So and I'd always tell them you can't invest in it then. So just don't overcomplicate it. Just stick to what you know. Make sure it's producing cash flow, and then the market will take care of itself.
yeah,
Yeah.
I love that. I love that. Love that. Um, so what's your investing goal for 2023 then?
My investing goal.
How do you plan to achieve it?
Oh, so hopefully continue to outperform this year.
Mm-hmm.
Probably make one or two investments this year. I don't know where that's gonna come from, but hopefully make one or two.
Yeah.
Um, Aside from investing, maybe my Instagram page continue to grow that.
Mm-hmm.
Keep continue to grow the newsletter. But yeah, that's about it really.
Yeah.
Yeah.
Personal goals for 2023?
Personal goals.
Yeah. Or was it all just on the investing and investing with
Yeah,
Wes?
yeah, probably just all investing, and
Yeah.
also maybe keep on reading.
Yeah.
Yeah, I'm currently reading Margin of Safety.
Okay.
Yeah,
What's
by
that book about?
it's Margin of Safety by Seth Klarman. So
Okay.
he just, basically just in the book is just installing what I've already learned.
Mm,
So it's a really good book.
mm.
I'm enjoying it so far. Seth Klarman is probably, yeah, he's my favorite value investor. I
Okay.
feel I align more with his thinking.
More than Warren Buffett?
Yeah, yeah, Seth Klarman.
Interesting.
I align with
Why more
more.
than Warren
I don't
Buffett?
know. I just with Seth Klarman, with him, I like how he just says it and just
Okay.
breaks it down simple. And I
Okay.
just, yeah,
You think he's a lot less he speaks in a less complicated way
yeah,
than Warren Buffett and other
yeah,
people, right?
yeah,
Yeah.
and I just align more with him for some
Yeah.
reason. Yeah, and I just like the way he thinks as well.
Okay.
Yeah,
Okay.
I
Okay.
mean, he's known as I forgot where he's from now, but they usually call him the next Warren Buffett because
Okay.
I think he's annualized around 20%.
Really?
So yeah, he's good.
For how long
Uh,
did you do
a
that for?
really long time, but I can't remember the
Really?
time frame.
20%.
Yeah,
Wow, that's impressive.
yeah,
Imagine getting 20% return. Your money's doubling every 5
I
years.
know.
That's crazy.
Yeah,
Every
really good.
5 years.
Yeah,
That's wow, that's
Mm.
insane. How do you think generally the stock market is going to play in 2023?
Um, so play out. To be honest, really don't know. It could go either way,
Mm-hmm.
really. For all we know, like it could go up like 20% this year, or could go 20% down more. For me, either for me, really, I don't really, make these predictions. I just continue to invest the best way I can. Whatever happens, happens.
Yeah.
Really, but I know a lot of people won't be able to take another 20% decline, because
Yeah.
that means these stocks will really, really come down, especially the ones that
Yeah.
don't generate profits.
Mm-hmm.
So yeah, we just have to wait and see, really, how the market goes. But if you're talking, long term,
Mm.
a lot of people are speculating we might see a lost decade. So
I hear that.
yeah,
A
uh,
lost decade means that what? No returns,
yeah,
really? Yeah.
yeah. I mean, it does make sense, because the market,
Mm.
when you buy high,
Mm.
your returns are less, and the
Yeah.
market's pretty,
Yeah.
expensive. So a lost decade, it might be a stock pickers market
Okay.
in the next 10 years. Who knows, really?
That's crazy. That
Yeah,
would be tough for people who are invested in index funds,
that would
right?
be very tough, very
Yeah.
tough.
Imagine you invested and for 10 years you got no return.
No,
The
yeah.
same that you might as well put in a savings account, right? At
Exactly.
least,
Yeah.
right? At least you
Yeah.
get something of it. Yeah.
Yeah.
That's the dangers of the stock market, unfortunately. I think
Mm.
that it's true that when you do invest, at the end of it, you could return with the same or less than you invested in. That is
Yeah.
the nature of the game. So you gotta understand that
Mm.
it's not like a casino for a lot of people think. It's like when you're putting your money in there, there is a danger that you could lose part of all of your money.
Yeah.
That's
Yeah.
that's the truth. So
Yeah. But I think, in terms of what you're saying, I mean, you could lose your money, but I think you just got to know what you're doing. So if
yeah,
you're picking individual stocks, um, and you trust the evaluation work, and you're buying on the undervalued
yeah,
companies, you will make money over the long run.
yeah.
But with this lost decade, the index fund, like, it's going to be very hard psychologically
Mm,
for the index fund people, because yeah, but it's a time to accumulate, isn't
yeah,
it?
yeah,
So, and just write it up when it goes up.
yeah. So what you got planned next for yourself?
Next, I've not got much plan, really. Just kind of, just continue. If anyone wants me to come on their show, I'm
Mm,
fine with coming on, speaking and stuff
mm.
like that. But nothing major really planned.
Okay,
Yeah.
cool. Where can people find you as well?
So you can find me on Instagram at investing with Wes.
Mm-hmm.
If you click on my bio on Instagram, there's a link tree.
Yeah,
So you could find me on Twitter. You could find my newsletter as well.
yeah, cool. And any final words for the listeners, watchers?
Final words. Good luck, everyone, with their investing this year. Keep learning, keep reading, and yeah, wish everyone all the best.
Awesome.
Yeah.
Thank you so much. Wes, yeah, wish you good luck as well in
Yeah.
2023. I
Thank
think the stock
you.
market is gonna be an interesting year. Watchers, listeners, yeah, just if you're investing, just keep your wits about you. Just
Mm,
keep on educating yourself.
mm,
Just keep on, seeking out information as much as you can. And
mm,
yeah, mentality is the most important, I think,
yeah.
in this as well. Stick to your guns, because as we've discussed here, like
Mm,
over the long term for sure, like I feel like investing, yeah, it's proven that you can make money from it. So
yeah.
yeah, and just make sure you do it the right way.
Mm.
Thank you so much for listening to this episode of the Takeoff Experience, and we'll see you next week.